Hello traders, it's Samurai Trader here. In this session we'll be covering a great deal of information. This is a sample trade and entry checklist. Will be one of the most critical factors of your trading, in my opinion. And just as an airline pilot has a pre-flight and post-flight checklist, so does the professional trader. You may have heard the saying, there are old pilots and there are bold pilots, but there are no old bold pilots. I think that's really applicable when it comes to trading. And as usual, if you haven't expanded your window to full screen, down on the right hand corner of YouTube, of course, you can expand the screen to full screen. Now, as usual, we have our risk disclaimer. Of course, all trading has risks. You're welcome to put your video on hold, and if you haven't already done so, if you could also please have a pad and pen handy and take notes. And I've also enclosed in your initial kit a Word document of the sample trade entry and exit checklist, so you can tailor make this to suit your own trading style. As usual, this is a raw, direct, unedited version, so if there's any grammatical errors, please forgive me. Now onto this. Now this is something that you hear me talk about all the time. Your habits control and direct your trading career, and this is a very old saying: sow a thought and reap an action. Sow an action and reap a habit. Sow a set of habits and reap a character. Sow a character and reap your destiny. Trading is about habits. It's about having the right habits, and I believe having your checklist and referring to your traders checklist, etc., every 5 to 10 minutes is one of the most important habits you'll ever develop. Now what we have in this photograph is, to the left, the first two manuals are pattern manuals or chart manuals. That is, I'm of course a pattern trader. I'm a sniper. That is, I'm looking for the very best setups, but most of them are geometric patterns that appear in the market every day. And that's the great thing I love about my trading. I'm just sitting back waiting for a pattern. That makes it so much easier. But as a reminder, because there are many different patterns and formations, as I'm sitting there waiting for a trade, I'll review these folders. But very important that I have and very important for you to know and to do also, that you have a really clean desk, because when we're trading, if you look at any of the prop traders or the professional traders working for the institutions, you look at the desks, there's very little on them, very little. So very important you keep just the bare minimum on your desk. The middle folder here is my rules folder, and that is my trade entry and exit checklist. Now I've got quite a number of pages of bits and pieces and comments and things, but on this particular page, these two pages are the core to my trading. Now I review them regularly, even though virtually every single setup I have what I call reflex action. I can recognize it in the blink of an eye. I still review my trading notes. For an example, after a long weekend or 3 or 4 days off trading, you do forget things, and it's just great to review and continue reviewing what you're looking for. But there's also another thing here, and that's this: trading can sometimes be boring, and by reviewing our list, it keeps us sharp and it just reminds us of the key points. On the far right here, we've got my notepad, and as most of you know, I take a lot of notes when I trade, usually at least 2 pages of notes. Well, maybe you might say, well, that's not a lot of notes, but I take at least 2 pages of notes, things that I notice, things to learn from. If ever I take an impulse trade, I'm human, and sometimes I'll jump on a trade, I call it an impulse, without thinking the trade through, that is, without reviewing the notes or assuming, and that usually comes after either I'm tired or I'm bored. So that's the whole purpose of having these rules. So I learn something new from trading every single day, and so should you. Of course, as I mentioned, you review your trading plan at the start of every session. So you've got 2 things here. You've got your trade entry and your exit checklist, but then you've got your trading plan. And I'm going to do a separate video. Well, you've got the separate video which reviews the trading plan, because the trading plan really covers why are you here, what's in it for you. So let's start to go through some of the key points you have in your Word document. Number one, I want to know, have I checked for red flag news? Are there any major news announcements for the day that may come out and may spike the market? Now, I always exit a trade before every red flag news, and of course the major news sites have the red flags on them. So you know what they are. So very important that you exit your trades well and truly beforehand. So I'll jot down those times for the red flags. Now I just thought, well, maybe some of you don't know what the red flag news sites are, so I use FOREX Factory. So FOREX Factory has one there under calendar, so that's the one that I use virtually every day. So once again, I want to check and see if there are any major news announcements for the day. The next thing I want to know, because a good 90 to 95% of my trades are trend trades, trend continuation trades, do I have a trend? Now I will look at my anchor chart. So I've got an anchor chart above my standard chart, my trading chart. So I'll see, am I trading in the direction of the overall trend on the anchor chart? If I have an 8 EMA, sometimes I do, sometimes I don't, and we'll go to a chart in a moment. Then is my 21 EMA trending? Is my 21 channel trending? Sometimes, and this is a trade strategy I'll be teaching you if you haven't already seen it, the 34 EMA bounce, the 89 EMA bounce, and the 200 EMA bounce. Now the 34 and the 89 are used as a trading vehicle by hundreds, thousands of traders around the world. So you've got thousands of traders that trade very actively using the 34 EMA and the 89 for trend. For 200, not so much as, but the 200 gives you a good longer term overview. And for those of you that may only have one computer screen, you may use the 200 instead of a higher time frame anchor chart. So if we have a quick look at a chart here, let me just pull one up. We can see the yellow line here is the 34 period. The magenta line here, cyan, my apologies, my cyan line here of course is the 89, and the purple color here, that's my 200. We can see a convergence on here right now. So if I was to ask you in what direction is the trend right now, of course, what would you tell me? We've got a very definite downtrend. So core to my trading strategy is I want to know in what direction is the trend heading. And my 34, the 89, the 200, and of course the channel will give me an idea. Now this channel is slightly different to our standard channel. This is a standard error bands channel. But getting back to the point of a lesson here, we can see here that the MAs give me a good overall trend direction. Now does the zero lag MA confirm the trend as well? Because what I will use is the MA, the zero lag, which is our little line here where it turns from magenta to cyan, and you can see it turns from cyan to magenta. That's a great confirmation of my trend direction. It can also be used as a stop. It can be used many different ways. So you can see the different things that you can use for confirming the trend. Now, is my trade entry above the 34 for a long or below the 34 EMA? Another rule, which is a self-fulfilling rule in many ways, is if price action is trading above the 34 EMA, well, for many traders, they'll trade long only. They will only take long trades. If it's trading below the 34 EMA, it's a signal that they should be taking short trades. You may also look at other time frames. Do you have a setup on a higher time frame or even another market that's confirming your entry at the same time? Now you've heard me talk about this a number of times, that the human mind can only process 5 to 7 pieces of information at any one time. So what you've got to be very aware here is that there's a lot of information just in these 4 or 5 lines I'm giving you. Some of this is not necessary. That is, when you have watched, or when you watch the trade setup videos, you'll see that I don't require all of these things on my screen. Only have on your screen until you become extremely experienced and profitable, have all of these items on your screen. Now, one of the other things that we may look at is, do I have a Fibonacci retracement? Now, the key Fibonacci retracements, of course, for pullbacks are 38.3, 50%, which is not actually a Fibonacci number, but it's so widely used in the trading world that it's self-fulfilling, 61.8%. So once again, at most of these levels, you'll get a T1. When you get a pullback to these levels, quite often you'll have a T1 signal for a trade anyhow. But if you use Fibonacci's, well, of course, if you're down on the list, there are a reminder, because of getting back to this amount of information that we process. Looking at your checklist allows you to keep checking your checklist. Is there anything that I've missed? Where are the pivots? If you use pivots for high, low, close prices of yesterday's trading, quite often price will trade from pivot to pivot. Where are those pivots? Because if you're in no man's land in between heading towards a pivot, very high probability price will actually go up and touch the pivot. So where are the pivots? I want to constantly see that. And of course, in most charting packages, your pivot is support and resistance, but you may not be able to see that pivot. It may just be out of above the screen, so you may need to pull price action down just to check out exactly where those pivots are. But keep an eye on them, because after a period of time you'll see that you bounce off pivots on a regular basis, and that really comes down to, where are the support resistance areas? Well, of course, pivots are support and resistance. Then you've got your swing highs, your swing lows, and you've got your small pullbacks. And so as you're trading, you may be in what we call no man's land. You may have rallied, have a pullback of 5 or 6 candles, and of course that's going to form a small pivot, a little swing high. I want to know where they are, because that could be a next point of resistance. Now, have I drawn in trend lines, parallel lines, pattern setups? So what I will quite often do is I'll draw in trend lines as I'm trading. Now let me just give you an example here. Now, going back to what we looked at earlier, now this is the NQ 133 tick. I like to use fractal points, which I've covered in a previous session. These little black dots here, I like to use those to draw my trend lines, because it gives me a better idea. Now, amazing things happens with these. Now, and by the way, I've got to say, it's not an exact science. That is, you've got to give yourself some leeway. So we can see here that if I join, okay, we just missed this one, we join this one. Let me do a parallel line now and just pull that up, and as you can see here, almost we've got virtually a little channel forming. Yes, we broke out there a little. Even if I pull this up a little more up here, and here we've got our breakout, which is also confirmed by some divergence and by our zero lag. However, it is also a counter trend trade. So these are the things, by drawing in trend lines, it'll give you a better idea of what's actually happening on your chart. Some of the other key points are, do I have a fractal break? Let me give you an example here on the chart. I pointed out earlier that these little black dots here are fractals. Bill Williams, of course, speaks extensively in his books about fractal trading, and there's many different trading strategies are based on fractals. So that is where we've had 2 candles that are lower on each side, then we get this little fractal point, 2 higher, 2 higher. A lot of these then can be used for support and resistance, and this is a trading strategy within its own. So if we have a look here at this fractal point, we can see over here we have a little bit of a bounce on price. So it's always handy to know, where are your key points? if we look at this one up here, you had a little fractal point here, and what a lot of traders will do is actually trade these. You have a pullback and you've got a breakout on here. Up here we've got a little breakout there. Here you've got a little breakdown here. So you can see that they'll draw lines or trend lines off those points, and they'll trade in the direction of the trend. These can also give you an idea when the trend may be changing. You can see here we had a higher, we can see here on this fractal here we had a slightly higher one there. We had a break, then it continued, but it's a good indication that the trend may be coming to an end. And while we're on this chart, there's another point I'd like to point out, is that we go to next on our video on our checklist, and that is, let me just remove these, remove trend line, is angulation. Angulation to me is a critical factor in trading for a whole lot of reasons. If we take this from here to here, this is our 34 EMA, and up here of course we've got our 89. Notice the wedge that is building here. Now this angle that's building up in a really fast moving market, as we saw here, to take any counter trend trades in a fast moving market down like this is suicide. Where is the trend likely to end, or where are we likely to have a reversal even for the short term? Well, by drawing in trend lines, and you can see this angle forming, this actually is a general indication that we have is a good chance, as we can see here, of a pullback in the market, and eventually we get quite a pullback and we have a nice little double bottom form, and this little point here was actually tradable. But look at this angle. So as I trade, I want to know, do I have angulation? Next point is price well away from the 21 EMA. The reason I want to know that is that the further we move away from our moving averages, the more likely we are to have a pullback, because remember, the moving averages, the MAs, will go back to the means, and it's like a slingshot formation. So if I've already had an extended move away from my moving averages where I'm getting angulation, there's a good chance I may have a snapback to those moving averages. Now this is covered in our video on trade setups T1, T2 and T10, but I do want to know at all times, what is a long-term stochastic telling me? Is it oversold? Is it bought? We can see here this black line here is my stochastic, my long-term, and here we can see for short-term. We can see I'm oversold, and in this particular case here, then I'm looking for a T2 setup, which is what happens up here. Well oversold, up we go in overbought territory, roll over, and that would have been a nice successful trade. When I see my long-term stochastic traveling in the window horizontally like this, I start to feel concerned, because this is a very good indication, and we can see here convergence of the 34 EMA that we may be heading into a chop zone. So by reviewing on a regular basis what our long-term stochastic is doing and the short-term, it's giving us a good idea. But as a reminder, and of course we've got a beautiful T2 trade here, as a reminder, it's on our checklist to be reviewing at all times, what is the long-term stochastic telling me? Likewise, what is the short-term? So has the short-term stochastic turned? The next thing is, do I have divergence on the MACD? Now with an MACD, if you're above the zero line, and in fact for many people they use this as a trading strategy within itself, if the MACD is above the zero line, it can be an indication that the market, you should really only be trading or taking long trades to the upside. Below the zero line, only taking short trades. Well, that can vary, and it can be a dangerous strategy if that's all you rely on. However, if you have a trade entry, say to go long, and I have very strong divergence against my trade, my entry, tell me one or two things: to end of a trade with a very tight stop, or just to sit it out. It's not worth the risk. But as a reminder, the purpose of your checklist is just to keep a general eye on these things. The next point: what trade number is this in the current trend? We know that the market moves in waves. We know that we have pullbacks. We know that we have profit taking. And I tend to find once you have had more than 3 to 4 trades in a row in a current trend, the risk grows dramatically that you are going to have quite a pullback or a change in trend, even if just for the short term. So just keep an eye on how many trades you've actually had in that trend. Some of the other key points on our list, of course, are the setups themselves. Now, traders, what I highly recommend you do is, because this is in Word, you remove a lot of these trades here, the initial ones that you're not going to be trading. Remember, temptation is something that lays before us all, and in quiet times, if we don't have, say, a T1 and a T2 setup, which, as we've discussed, are really the key setups that we have, with all the other setups on our checklist, there's always a chance that we may be tempted to take them. On the other hand, if we feel that we have the right discipline, and because the market can be quiet at times, it's great to be learning, to be teaching ourselves, watching for these setups in real time. So do I have a T1? Do I have a T2? So what you may choose to do is to mark these up in real time. Do I have a T10? So the key ones, of course, in your early days are going to be your T1s, your T2s, and your T10s. So what I have here over 2 pages is the different types of setups that we have. We get down to, of course, a 34 bounce, but you can just see how many different setups you could be looking for, which I've covered extensively in the trade videos, in the strategy videos. Other things on our checklists are: what are my profit targets? Am I seeking a measured move? Am I targeting a Fibonacci extension, support, resistance levels, etc.? Another absolutely critical factor of our checklist is my trade entry correct? For an example of a number of contracts that I may be trading, you may have different amount of contracts for different markets. You may be trading different markets. Have I placed my stop? Have I put into my trading dome my profit targets? Traders, these are key points that I've been caught on myself. It's just so easy. Am I taking notes on my trade journal as I trade, as I should be? When I leave my office work area, I must ensure I have no active orders in the system. I've been caught on that myself as well. You get distracted, someone knocks at the door, or you go out for the day and you've left an order in the system that eventually gets filled. That's very important. Then what other information do you need or require on your checklist? So on my personal one, I've got a number of motivational statements and a number of statements on discipline that I've added to my checklist and in my folders, so that as I'm trading actively, I can be reviewing them and reminding myself what my goals are, and this really helps keep me in check. So any questions at all, please drop me an email, and I look forward to seeing you on our next video.